Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, looking for investment opportunities, sharing those opportunities with everybody in the community. I also share my opinions on a wide array of things: macro, portfolio allocation, portfolio construction is what some people want me to get into. I can cover that. I can share what I am doing. It's obviously not tailored to any individual or anything like that. But I'll share what I'm doing and how I'm positioning for the upcoming bull market that we are in commodities. Special to coupon code if you'd like to sign up. It is $25 off the first month only on the monthly membership. It ends up being 25 bucks for that month. And you get a $100 discount on the yearly membership for $500 a year. And you can swap from a monthly to a yearly if you'd like. So starting with gold, silver, HQ, the largest tinfoil hat preppers are central bankers. Central banks are in their longest gold buying spree, net gold purchases by central banks. You can see this here. Big accumulation. They actually sold the bottom of the market. And I'll show you what that looks like, my opinions around it. So I'm going to pull up silver. Silver is the asset that's been freely traded all the way back to the 1800s, not gold. Gold was on a fixed rate deal in the 1900s. So this is what I think is going on. I can also put the US 10-year. I've shown this before. Put it on a new pane. You can see that silver trades with interest rates. It's basically the same pattern. We had a nice big downward trend line here over all those years. That is broken here recently, and you can see that the consolidation of the cup and handle was the decline in interest rates. The increase of interest rates is the increase of silver price. And again, that's money rotation and the conditions that are being traded in the markets and that the humans are being subjected to. So it is of my opinion that we are going into a very big bull market for silver and gold and platinum and palladium because of interest rates and inflation. That is the main driver of this bull market. As you can see, we're breaking out of the big 50-year cup and handle pattern. That's great. And this was spurred from all this all this buying in gold here for central banks. And I believe that that is because of the market condition. It's the unwillingness for people to buy bonds at a declining interest rate environment. So they started to buy a bunch of gold over here in that corner. And it was the interest rates breaking out that's causing them to go buy a bunch of gold. They don't want to cycle dollars back into bonds because of a increasing inflationary environment with increasing interest rates. So the value of those bonds that they would be purchasing at this time here would be going down. So they're not recycling money back into bonds like they did in a declining interest rate environment here. They are swapping into gold, and that's your demand. That's everyone's going to do that. It's not just central banks. Everyone, retail investors and other people, they're going to start allocating more to gold, more to silver, more to whatever else. So it's all part of the cycle. Now, is this going to be the game-ending move over here when it goes up, where the dollar uh, goes into hyperinflation? I'm not exactly sure. I hear a lot of people say that on YouTube. It's definitely possible. I'm not stating that it's not possible. I just don't know. But we should already have been there before all this. So we should already be in physical metals. We should already be positioned in commodities. We should already be positioned for all this to play out. So if it plays out that way, then that's great. I'm already in it. It's good. James Henry Anderson says perhaps $6,000 an ounce is the first step for gold. There will be a second step later on, and it promises to melt myriad faces off. So this is the 40% backing of monetary base is the blue line. 100% backing is the black line. So the 40% is roughly $6,634 per capita. And then the black is 16,586, and that is September 2025 dollar pricing. If they continue to print money of the monetary base, we will see this continue to go up. So we could see this easily be $20,000 an ounce, maybe by the end of the bull market. Very, very possible. And you can see back in the 1970s that we could have went back on a gold standard. There it is. And if that were to repeat, we would go all the way up to about 20,000, 18,000, $20,000 an ounce. It says buy the dip strategy. So buy the dip trading strategy is having its best return in more than 30 years. And this is the average S&P 500 return in session following the down day. So, can we apply that buy the dip mentality to gold? Um, I just want to know, like on this chart here, can you guys show me where these dips are located? It's like straight up, guys. Where are these large dips occurring in the gold price here? We had a little bit of a consolidation here and here, but that's not really a big dip. That's that's like just a little bit of a little consolidation versus a big dip. So yeah, I just wanted to apply that to gold. Say like where are these huge dips? Tim Hack says in an arms race, the value for rare earth and strategic metals surpasses even the value of gold at some point. I see a greater than 10x increase from the current $70 level toward the $1,000 area. Some explorers in the sector will go up 100x or more in rare earth materials. So this is REMX. This is the ETF. Um, I was so lucky to buy it at a very good entry point. It was actually down here in that corner. Um, yeah, the pattern looks absolutely fantastic, and I don't know if it's going to go that high. I have no idea if we're going to get to that level. Is it possible? Sure, it's definitely possible. I actually have, let me pull up real quick if you guys are so patient enough. I actually have a rare earth metals versus gold chart. I did not prepare it, so hopefully I can bring it up here real quick, showing the outperformance, if I can find it, of rare earths versus uh, precious metals. If I can find it, I don't know if I can. One second, guys. We are pulling it up. No, I'm not. I don't see it. Well, I don't have it. So, anyway, the last bull market for rare earths went up dramatically more than gold and silver. Now, if we are in a game-ending move, I'm not sure if that will occur again, but this chart looks really good. It looks fantastic. I see it more as a pattern here where you draw a line at the bottom and then you draw a line going across. And that's a big like megaphone bottoming pattern. Could be an accumulation cylinder too. Um, and then we break above that and yeah, we rip. Totally agree. We could look at for some of the rare earths. If you guys have rare earth companies, we have a couple. on the website already that I have small holdings in. But if you guys have ideas on rare earths, we already own the major rare earth producer in America, and we own a couple of small developers. But if you guys have other ones, ask me and we can chart it out and we can see if it's a good opportunity or not. Weimar Silver Baron says they're doing these stories again. The ore body isn't very big, and due to its depth, it's very high cost, needs a lot of drilling too. Yeah, whenever gold goes way up or silver, they release these articles like huge geologists in China just stumbled on the largest gold mine in the world. There are less than 21 million BTC in existence. And I'm seeing all this crap come through the Twitter, Twitter on here. Last time it was like the largest find in Zimbabwe. It was this gigantic gold find. And why does it always come out when gold's going way up, when it's going vertical? And then you know what else I find really weird? On Friday, they hit the price pretty hard, right? And they hit it across the board: gold, silver, platinum, palladium. And then I'm seeing all these articles come out of like geologists in China stumble upon the largest gold mine in the world. They did that before, but it was Zimbabwe. Like, how obvious is this? I mean, they really want you to go into Bitcoin. They're literally trying to funnel money at Bitcoin as best they can, and it must. This is my guess, guys. This is my guess. All right. They don't want people going into physical metal. Period. They want people going into Bitcoin, and my guess is that Bitcoin is backed by stable coins, and stable coins are backed by treasury bonds or bills or something like that. That's what I think is going on. They're trying to create demand for the bond market. That is my ultimate guess. And they're doing it through Bitcoin somehow. Coming down, breaking. The U.S. is rolling back tariffs on products that cannot be grown, mined, or naturally produced in the United States. What is that, like everything then? I mean, this doesn't make any sense. If we could have produced it in the United States cheaper than everywhere else, then why did we send it out in the first place? And here's my guess. My guess is that the rules, the safety rules and guidelines for emissions and all these different things, we took the nastiest, dirtiest jobs and sent those out first because it was too costly to do it here. That's my guess. And it deals mainly with rules and regulations. That would be my first guess with the majority of stuff that we move. So chemical processing, processing of rare earths, things that emit a lot of emissions, those all left. They're all gone. And more than likely, we're not bringing those back. Patrick Karam says we could be closer to a debt explosion than I previously imagined. This will be a government effort to save the dwindling economy. Gold and silver miners are front running this. Totally agree with that. Here's the momentum. See how the momentum's at support, and that we could potentially break out with money printing. So the total debt has been trending upwards for a long time, but the unseen and more important metric is its momentum changes. And we could be seeing a large momentum change soon where they print a bunch of money again. 2008 was a big occurrence here. Same with 2020. And you can see the momentum was all in favor. And we're coming down to support, and we could be turning up here maybe over the next year or something like that. And what he says is when we break through that line, the SPX, NASDAQ, Bitcoin underperform above that line. Gold, silver, oil miners outperform above here. And we're seeing evidence of bottoming patterns and breakouts in those sectors of gold, silver, oil miners, and all that stuff. Well, oil's still, well, the oil companies don't look bad. Oil itself needs to still find a bottom here. And this is, I think, this momentum and oil, I think, trade very similarly. So once again, a gentle reminder that the recent gold appreciation has exceeded money supply growth significantly in the past year. The argument how gold will always go up due to money printing is only correct to an extent. So this guy's wrong. He started it here at 1997, an arbitrary starting point. This is why you don't want to listen to people on Twitter necessarily. This is not correct information. The way that you want to look at this is you have to do it like I have up here, which is the US monetary base per capita versus gold. This is the way you want to do it. The reason we went off the gold standard is because we cheated money printing. This was the cheating of money printing back in the 40s, 50s, and 60s. And then we had this large disconnect. Then it revalued. So you have to start it and align it where you have a one-to-one relationship. That's where you have to start the chart. If you started at some arbitrary starting spot like this guy did, you get incorrect information. So, I see this a lot. A lot of the people that are big YouTubers, even, they don't understand where to start and stop data. Reventure Consulting is a huge person that doesn't know what the heck he's doing. He puts all these charts and he has like percent increase. I'm like that's not how you want to do it, buddy. Like that's what we learned maybe like if you're in elementary school. But when you go to college, you run statistics, you go through math, you figure out like you have to somehow baseline it at some point. And that's where you have to figure out where you basically start your base from. US oil, the downtrend into the next intermediate term low is in progress. The earliest the next low could happen is the first week of November. The minimal downside target is the yearly R2 pivot around $52, is what this person is saying. He's taking these cycles, so cycle, 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 and he's trying to figure out how to do it. Now, how much faith do I have in these? Not that much. A lot of the, I'm real, I'm real. I have a lot of faith in the ratios and the big long term cycles, but as you shrink the cycles down to like this, um, I don't have as much belief in them. I think they kind of break down. I've seen Elliott Wave, and in the short term and even in the intermediate term, things can stretch, they can get elongated, they can look different. So I think there are underlying market conditions that can distort these patterns and cycles. So the value is 100% right. Like if you're way undervalued, then it's just a matter of buying it and waiting. Cycles, I'm not as big on shorter time frames. The longer time frames, I think it's 100% fundamentally driven, and the fundamentals drive the herd. But the shorter term, they can be so distorted. I don't put a lot of weight on it. Here's Grady. Been trying to put the message across that there will be no bubble phase in this gold bull market. Because this time around, after the present final third bull move, the world will have a new monetary system backed by gold. This will pin gold at the highs value-wise, meaning there is no bubble. And that means that this is not only a normal bull market, it is also a global monetary system reset. It is vital to grasp that this is not gold going up. It is mostly currencies depreciating. So for heaven's sakes, do not miss it. There's the breakout. First bull move, second and third. And the third bull move, which will kill the present global monetary system. It is not a bubble, in his opinion. Kobayashi letter says gold is becoming unaffordable. It now takes 116 hours of work in the US to buy 1 ounce of gold, the most in at least 100 years. This comes as gold prices hit a record close of 4,225, while average hourly earnings reached 3,650 in August. The ratio has doubled in just 18 months. The surge in gold prices has far outpaced income growth. This surpasses the previous peaks of 80 hours seen in the 1930s, 1980, and 2011. By comparison, at the start of the century, it took less than 20 hours to buy 1 ounce of gold. Gold's rally is even stronger than you think. This is hours of work to buy 1 ounce of gold. And I love the ratios. I love this ratio. So what this means is that you could have really loaded up on gold in 1968 and 69, late 60s, early 70s, and you got one heck of a deal. That was like the bargain of a lifetime. Another spot was 2000. 2000 was a bargain of a lifetime. The market conditions aligned where you could have purchased this at pennies on the dollar compared to where we are today. So, yeah, we're expensive if you price it in average hourly earnings of all employees. Now, does that mean we can't go higher? No, it does not mean that. It's one metric. And I have a feeling that everything that is on this earth that will get scarcer. So, in terms of flow rates, not in terms of total quantity, but in terms of flow rate, I think this is going to happen to everything. I think the cost of living is going to skyrocket because we are hitting constraints of the world. And that our debt system, our debt monetary based system, in the way it's designed, is running into resource constraints. And this is what's happening. So people say, oh, well, they spent too much money. Well, you can also look at it that we can't grow GDP fast enough to keep pace with spending, which means that resource abundance may be a problem in the future too. Eric Yoon says milkshake simpletons who went all in on TLT since 2021, 2022 because they listened to BJ Milkshake, Jeff Snyder, and the Burger King. I think that is, what's his name? Oh, crap, I can't. He calls himself the Bond King, which he wears a Burger King hat. Um, yeah, whatever his name is, I can't remember his name. But yeah, yeah, milkshake simpletons getting crushed, getting crushed. You know what's even better? Let's do gold versus TLT. This is what those guys were saying. They were going to say, oh well, that's going to outperform. They were saying that right through here. Look at that. Look at the underperformance of TLT versus gold. Gold absolutely shellacking the bond market. Way to go, guys. Way to go. Reminder to all the gold top callers I see in my feed today, the bigger the bull, the more it bucks. Learn rodeo economics. Yeah, I'm seeing a heck of a lot of sell your gold, buy Bitcoin. It's pretty annoying actually. But yeah, make gold great again. It says they can confiscate your Bitcoin because they know exactly who you are and every transaction you've ever made. Probably the most easily confiscated asset in history, which is Bitcoin. Yeah, let's go into that, guys. Real great, real good. Yeah, nice call. Nice call. And it was probably created by some insiders in government. Way to go. Good job. Breaking news, and I don't know if this is true or not, but India's largest precious metals refinery ran out of silver stock for the first time in its history due to high demand from Indian customers. Wow, read that again. I don't know if that's true or not, but if that's the case, then yeah, physical is going to get real tight here. Now, some people ask, should I buy the ETF, SLV, or PSLV, or buy physical metals? My answer has always been get the physical metal. Well, what about the storage fee? What about storing? It's like, I don't know what to tell you guys. Do you think people are going to be scrambling over the ETF, or do you think they're going to be scrambling over the physical metal that goes into products that people need for their customers? Now, some people say, well, that doesn't matter. Guys, the price of Apple, the price of all of the companies, that price, the future earnings and the price to earnings that people are paying for those companies, they're not paying to have a shortage of minerals where they can't build products. They are paying a high premium because they think that the world in the future is going to be bigger than it is today. So if there is a physical shortage of silver, that will have an impact. If you can't source it, could have an impact on the price to earnings of companies that use silver or use copper or whatever the shortage mineral is. See, I'm out on the curve where I'm looking at this saying the pricing of future companies, the earnings, the future earnings of the companies are completely mispriced due to scarcity of minerals. And I don't think people figure that out. The future scarcity of minerals is going to result in lower price to earnings ratios in companies that use minerals, which is like a lot of them. I mean, it's like almost all of them. And then service companies are also based off of companies that use minerals because they're servicing those companies. So, yeah, it appears to be over MSTR, and I expect a decline of 90 to 99% in breathtaking fashion over the next couple of years. The most damning evidence against Bitcoin USD available, and MicroStrategy's right at the trend line trying to break down. That's one to watch. If this breaks down, things could get really interesting. And I don't know if it's going to break down. We'll watch it. Here is here's the big long term. So there's the kind of top. Maybe we roll over the bull trend line that occurred from 2023 onward. I don't know. We'll see. A lot of people are pretty bullish on Bitcoin. I've been hearing Bitcoin calls for like 250,000 in 75 days. I'm like, Jesus, that's a that's a big call. Maybe they know money printing's coming. Maybe that's coming as a bunch of QE and money printing. I think Eric Trump stated that they're going to have to do quantitative easing, and that he's bullish on Bitcoin because of it. So maybe the insiders know something that I don't know. Here is Katusa Research. Gold miners just hit the jackpot twice. Their profit margins surged from 500 to 2,700 per ounce as oil prices tanked from 85 to 60. It's the widest profit spread in modern mining history. So gold miners' margins surge as oil falls and gold hits record highs. So there's the miners' all-in sustaining cost margin as the oil price moves a little bit lower. Gold price and silver price continue to go higher. I think it's a good setup for miners. We could see a surge in the mining companies continue. Tim Hack says, I see gold at $20,000 plus, supported by worldwide physical buying by Main Street and Wall Street. And I see silver supported by large-scale industrial buying, melting well into the triple digits. They will build up stock, making sure the machines keep running. That is 100% true. Now, is that what's going to happen? It sure looks like it. I mean, that's a heck of a cup and handle pattern that's just breaking out. So yeah, industry can panic, and they want the physical metal. And they're going to take it from people who are going to sell it back. We have a lot of people that are selling to gold and silver mining shops, and that will feed back into refiners, is my guess. Lucas Ekwame says shale growth is collapsing. 2023, the growth was plus 800,000 barrels a day. In 2025, it is plus 80,000 barrels a day. In 2030, what is it going to be? We're probably going to see a decline. That's a 90% drop in just 2 years. A peak in U.S. shale would be a true game changer, and this is the growth rate declining. Do you know what that is? Geological constraints. And technology is not going to reverse geological constraints. And that's where I'm going to end it. So that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special is the coupon code. And we'll catch you next time. See you guys.